Hey everyone, welcome back. So this is Joseph with Power Capital Solutions. And listen, today I want to cover, or rather I would like to debunk 6 common myths associated with hard money. So for those of you who may not know, Power Capital Solutions, we provide real estate capital for real estate investors. So whether you need a fix and flip loan, short-term rental, or even just down payment and cash reserves or gap funding, we have you covered. Now, time is precious. Without further ado, I'm going to go ahead and dispel some of these myths. So myth number 1, hard money is more expensive. Now, on one end of the spectrum, you go with the traditional bank. I mean, rates are definitely a lot higher than what they were, say, 2 or 3 years ago. And I guess I'm going to date this video because right now rates are on average around 7%. Typically, traditional banks are going to be on the less expensive side versus hard money. Hard money, you're looking to start maybe somewhere around 10%, depending on your credit and experience, all the way up to 15%, even 18%. So it gets up there compared to a traditional bank. But at the end of the day, you have to look at the other costs as it relates to borrowing money. So if you were to go the traditional bank route, but that bank takes too long to close on your deal, that's going to cost you. Now, on the flip side of things, as it relates to this particular myth, you got to understand when it comes to hard money, the faster you use it, the less expensive it is. The other thing to consider also is shorter terms without prepayment penalties means that you can pay the loan off a lot faster, which makes you pay a lot less interest. Myth number 2 is that you don't need documentation for hard money. Not quite sure where this myth originated from, but you do need a couple of documents. You need to prove that you are who you say you are, aka a valid ID. You also need to be able to prove you actually have a property under contract, so you will provide the purchase agreement along with the signature from the seller as well as the buyer. And every lender has their own criteria as far as what they look for as far as documentation wise, but you're going to have to submit some documents in order to prove you are who you say you are, you have the money that you claim that you say, and the deal is as good as you proclaim it to be. Myth number 3, you have to be desperate in order to get a hard money or a fix and flip loan. Savvy, smart investors who know what they're doing use hard money. If you were to walk down the street, go into your local bank or your credit union and tell them you would like to purchase a property, fix it up, and then resell it within a couple of months. Oh, and by the way, you don't plan on occupying that property, they're probably going to look at you as if you have a third leg growing out of your forehead. So an investor who's savvy, who's sophisticated, and they understand how money works as far as funding real estate transactions, go the hard money route. Number 4, hard money loans or fix and flips are risky. Any business is going to be risky. So it really doesn't make any difference if you get the money from your local credit union, you get it from a hard money lender, or you have someone in your network who can become a private money lender. At the end of the day, it's always going to be risky, which is why I always encourage investors to understand their numbers before reaching out to a hard money lender. Myth number 5, hard money is a trap. So this is once again pretty ridiculous because anything you do in life is going to be risky. Furthermore, there's this common belief amongst certain people that hard money lenders are out to get investors and want to put them in really bad terms, put them in a disadvantageous position so that they can seize their property. And honestly, if you guys understood the business of how hard money works, it can actually be a much bigger headache for a hard money lender to attempt to seize a property after an investor has defaulted. Oftentimes it's a lot easier just to pick up the phone, have a conversation, and just work through it. So hard money, not a trap. No one is out to get you for the most part, but you do kind of gotta watch and make sure you don't get connected with the wrong kind of lender. And lastly, hard money lenders are like loan sharks. Now, it may have been back in the day, hard money lenders actually were kind of like loan sharks. Someone will come, sit you down in the chair, tie a rope around you, and just break your legs with a baseball bat. But ladies and gentlemen, that's not the case today. Hard money lenders are business professionals. They simply want to loan money to savvy investors who are bringing quality deals so that you both can make money together. Hard money lenders being loan sharks, that's just a myth. So with that being said, if you are a real estate investor looking to do a fix and flip, or maybe you're trying to do a rental acquisition and you're kind of on the fence about whether or not to use hard money, I hope that this video has given you some kind of reassurance regarding what hard money is, how it works, what it is versus what it isn't, and debunking some of those common myths out there in the marketplace. By the way, if you do have a fix and flip scenario and you want to run it by our team, please make sure you reach out to me. Email me, joseph@powercapitalsolution.com, or if you need unsecured funding in order to cover down payment, cash reserves, and closing costs, make sure you click the link below this video. And if you just don't have a deal and you just like watching this content, thank you for watching. Catch you next time.